Ashok Buildcon, the execution delays have hurt the Q1 earnings. We have Paresh Mehta, he's the CFO of the company, joining in to talk a little bit more about the quarterly performance. So a bit of a disappointment, which is what we've seen in the first quarter on that execution and the delay in receiving the Karnataka 3 HAM. What really happened in Q1? Why did we see these execution delays? And, will this weakness persist?
Good morning. If you compare, generally construction business EPC turnovers are cyclical. So quarter by quarter, if you compare, we have done better off. We have grown 27% over the last Q1 20. So that way, the performance is fine. Okay, if you compare it to Q4 of the last year, probably it's dipped down basically because of a delay in land appointed date for our 4 projects. 3 projects in Karnataka, and issues on land availability as it is, which is always there, which gets sorted over a period of time. So I think from a perspective of performance for H1, probably this performance would be lower, but H2 will cover up whatever expectations of growth is given.
Right now, the railway segment has started yielding results for the company. You've got an order book at close to 1,100 crores there. Is that going to continue to remain one of the key growth drivers for you? What kind of numbers can we expect?
Yeah, so this will, we have just started on the EPC business of RVNL projects, and we will continue to focus on that because it gives synergies of both track laying as well as electrification of railway lines, which are skills which we already have in our businesses of roads and power. So this will continue to be a significant portion of our growth in work orders.
Right. Now, despite Q1 being weak on execution, can we see the current order book drive a 20% CAGR growth?
On the order book position, definitely there has been a run in the order book bidding by NHAI because of various reasons, because since December they have been in the election mode, which is now settled down, and probably in the next month they will start bidding. Also, land acquisition being certain issues and financial closure being issues, they have been sorted in the last year. So I think so bidding activities start, and we'll continue to look at robust order book growth, which is today standing at almost 9,000 crores, which is almost 2.2x of the last year turnover.
Also wanted to understand, what really is the status on the completed assets owned directly under ABL, which are now majorly debt-free, as we understand. Do you think completed projects have the potential to contribute with a growth of about 20% annually?
So we have a very few assets, BOT assets under ABL directly, that is not at the parts of subsidiaries but as divisions. But they are small, so they're not very significant contributing. But we do have annuity projects under ABL, under subsidiaries, but which have debt. So they have just been commissioned a year back, and they will continue to, they have approximately 10 years concession for annuity to accrue. So they will do well. And
the interest rates being as low as they are currently, do you really expect IRRs of the project to be more viable, which comes up for new bidding?
Definitely. With the challenges most of the players, smaller players facing on the equity and the debt size, a lot of rationalizing in the bidding atmosphere is happening, and people will bid with better IRRs in order to participate in the bidding activity. And very limited players in the PPP style of bidding would be participating.
Okay. Can you just give us a sense as to what is the outlook in terms of your margin picture? What exactly is it that you're targeting by way of your order book? What are some of the major orders that you're looking at?
So on the order book front, we have an order book of 9,000 crores, and we expect that by the year end we should be in the range of 12 to 13,000 crores taking care into whatever execution we do in this year. Also, on the margins, we continue to maintain that we will be in the range of 12.5% EBITDA margins before other incomes. So that continues to be our focus, and we will achieve that by the year end.
To have you on the show. Good chatting with you. Thanks much for sharing with us highlights of the quarter gone by and, of course, the visibility as well going forward.